Of course, artificial intelligence is the big story. And speaking of AI, you've been investing in it for years. Now that it has become mainstream, let's say, can we still consider it a disruptive innovation?
Yes, actually, it has just begun in terms of its impact on enterprises and consumers. Right now, we feel we're in the equivalent of the early 90s when it came to the internet. We had just begun and we had miles to go. In fact, we're still learning how powerful the internet is. That is where we are with artificial intelligence today. And I also think what is not appreciated is how big a catalyst AI is going to be to all kinds of innovation around robotics, energy storage, blockchain technology, multi-omic sequencing. So it's a huge catalyst, and it's barely begun.
Also interesting to watch how the government's actions on being protective of our technology and national security are giving business such a big leg up. And you know, it's not new, but there does seem to be an onslaught of it right now.
Yeah, and it's the CHIPS Act. Yes. You know, yesterday that Samsung just got that big award, Intel got a big award, but China's doing it as well. And so this is, you know, this has been Gina Raimondo's thing, is to keep us separated and competing against China and making sure these restrictions go in place so that the lead, that at least the perceived lead that U.S. companies have, can be maintained. I would also note, it's interesting because Microsoft, they're talking about security and so forth. Microsoft got just taken to task just a couple weeks ago for some cybersecurity failures. It had like hacked emails and so forth of government officials. So not perfect reputation, but better than, at least in the U.S. government's mind, better than a Chinese company taking over.
Steve, thank you.
Steve, thanks.
The tech world can be a bit of a roller coaster for investors. Companies rise and fall faster than analysts' predictions, and keeping track of who's hot and who's not can be tough work. However, one company seems to be defying the odds, and that is Intel, the chipmaker that has been a household name for decades. Now, Intel has always been a major player in the world of computers, but lately there's been a buzz around its forays into AI. In this video, we're going to walk you through Intel's recent and groundbreaking AI news, which is causing many analysts to turn bullish on the company's stock. Before we dive into today's video, if you want to keep up with Tesla's latest updates, as well as other large caps, you can follow our Twitter account. We post multiple times a day about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Let's talk more about investing in tech and AI. Joining us for that is Jeff Yang, founding partner at Redpoint Ventures. Jeff, great to have you with us.
Hi, Melissa.
There's a lot of enthusiasm in the space, particularly on the hardware side, and I'm wondering, you know, can we call that side of the AI picture a bubble, and where are we on the other side in terms of software?
Well, I mean, you know, every decade or so, there's a platform that comes around that unlocks enormous value. And everyone builds on the last, and everyone historically has been bigger. And this one, I think, could be the biggest. So there's a lot of momentum behind it. You see it in the market today. In the private market, the AI companies are getting a substantial increase in valuation, maybe about 3x what other companies. And they're raising about 70% more capital. But they're also growing faster. You know, by our numbers, these companies are growing about 2.5x faster, about a little over 450% year over year versus about 200% for the other companies we look at. And so, you know, this is a very large and vibrant opportunity.
Do you think, I mean, if we are in a situation where companies start looking at their budgets carefully, and we could very well be in that situation at some point in time, is AI spending bulletproof effectively? I mean, is this an area that companies have to spend on so that deployment will continue even if there are cutbacks elsewhere?
Well, I mean, nothing's bulletproof. Everything goes through phases and goes through highs and lows. But I really think this is something that is going to affect pretty much every company and how they think about their business and how they go about doing it. I think, you know, first you start with the models, and then you look at the infrastructure that helps implement these models. Then you look at the application that builds on top of these models. And then finally, companies that will benefit from the productivity gains or build new business models are all opportunities. I think people using enterprises and end users using AI it'll be foundational in everything they do. It's almost like the internet became foundational in how you think about business, or mobile became foundational. I think that's how it'll be with AI. And as I said earlier, every trend builds on the other one. So I think this one could be bigger.
It's a bit hard to imagine now, but Intel was once a darling stock in the crowded tech sector. However, lately the once dominant company became overshadowed by rivals like Nvidia and AMD, who were developing and producing highly competitive AI-powered products. Some analysts even started thinking of Intel as a thing of the past, and one analyst who seems to agree with this take is Bank of America's Vivek Arya. Arya recently lowered his price target on Intel stock while keeping his neutral recommendation, but there's more to the story than that. Hello everyone, and welcome back to Investocracy. While Arya lowered his Intel price target from $50 per share to $44, he still expects some upside, which if realized would mean a gain of over 23% on where Intel stock was trading at the time of this video. The reason for this upside is based on Intel's latest efforts in the field of AI and the impressive technologies and products that it's currently pushing out.
In terms of, we're going to show viewers the NASDAQ Redpoint Cloud Infrastructure Index, which you put together, and it has a lot of, it has publicly traded cloud companies. A lot of them have high valuations relative to the S&P 500, Jeff, in an environment where interest rates are higher, and it looks like they will be higher for longer. Higher interest, higher valuation companies typically come under pressure. This group is no exception. I'm wondering how you start thinking about that in terms of imputing the value of the private companies you are putting new money into if the public valuations are under pressure.
So let's just talk about the index just for a second. We did this in partnership with NASDAQ, and Redpoint launched the first infrastructure index in June of last year. And we're tracking the top public companies in the cloud infrastructure space. And very much, you can think about cloud infrastructure as the picks and shovels to the modern economy, which powers virtually every industry and everything we do, including ordering food, booking travel. And it's industry agnostic and truly a horizontal opportunity. And in the category, it spans three major verticals, operations and developers tools, cybersecurity, and data and AI. So in many respects, the discussion we're having about AI it should be incorporated in this. And we did it because we realized that the market was missing a pure play index in building cloud native infrastructure. And so a lot of the companies that you're going to end up seeing in this are going to be pure AI companies, in addition to the other companies that use cloud infrastructure as part of their business. And today they have about a $600 billion market cap, and they're very high growth with a median of about 20% revenue growth in the area. And, you look at these companies, and certainly they're going to be, the valuation, because of all the technology companies in this space, are going to be tied to what happens with interest rate and interest rate expectations. And you see that certainly in the private market, as the private market flows into what public valuations can be. But we think over the long term, the revenue gains and revenue opportunities are substantial for these companies. And as I said, the market opportunity is enormous for AI, and you're seeing it in the public markets with how the Magnificent Seven, is doing, and all of them have a profound AI story.
Intel isn't just dipping its toes in the AI pool. Rather, it is going all in. The chipmaker is pouring resources into developing new hardware and software specifically designed for AI, and basically betting big on this brainy revolution. And guess what? This ambitious move is making Wall Street analysts take notice. While overall sentiment on Intel seems to be one of cautious optimism, it's evident that there's a lot of opportunities in store for this company to grow significantly. Intel is in the midst of a concentrated push deeper into proprietary chip making, and that's because a large percentage of the world's advanced chips are contract manufactured by TSMC. This strong competition means that Intel would need to do more in order to stay relevant in the market, and the chipmaker is actually giving it a shot. In what seems to look like a major counterweight to its Asian peer, Intel has begun the build-up of its Intel Foundry business unit. Although at the moment, Intel Foundry continues to post deep operating losses, Arria has sounded a bullish note on that business, stating that the upcoming expected recovery in the PC market, along with a bump from AI functionalities that will require greater processing power, could provide a decent lift for Intel. Intel is also looking to increase its influence in China as well, which is one of the company's most important markets. Recently, it was reported that the company is developing new chips for China that comply with US regulations, and it's doing two versions. One will launch in June and the other in September, so we might see an uptick in Intel's revenues for the next quarters. That said, let's explore some recent interesting news from Intel. But before we do, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Intel. Now, back to the video.
Investors are trying to figure out is how long of a tail does the AI trade have with relation to ASML in comparison to some of the other large semiconductor plays that are out there right now?
Yeah, I think this will continue for many, many years. They already made an estimate for 2030 that in the coming years, the semiconductor market will double to more than 1 billion, but it's 1,000 billion, I think. So today it's 500 billion worth. So it will double in 2030. That will be a growth of more than 10%. So the market is very good for semiconductors. There's lots of demand for logic in the AI chips, but also for memory in the AI chips. High bandwidth memory. There's a lot of demand there. So I'm absolutely not worried about demand for ASML in the long run, especially when you look to AI. But also, we see a very strong trend of electrification. We try to get our energy from windmills and from the sun. And you also need a lot of semiconductors for that. We see a strong trend in electric vehicles. So there's a very strong long-term demand for semiconductors. And ASML is exactly in the right spot, I think.
Intel has recently unveiled the world's largest neuromorphic system, which is all about making AI more sustainable. This system, dubbed Halo Point, is essentially a giant computer built with neuromorphic chips. Just as the name implies, Intel's new system is designed like nerves, and they function a bit differently than the typical computer chip, mimicking the way neurons in our brains fire and communicate. This chip, which was initially deployed at Sandia National Laboratories, boasts an impressive array of capabilities aimed at propelling research in brain-inspired AI. And with its state-of-the-art computational efficiencies, the system promises to support a diverse range of AI applications, including scientific problem-solving, logistics, smart city management, and large language models. So, why is this all a big deal? The answer to this question is energy. Training complex AI models requires a ton of data processing, which translates to a lot of energy used. That's where Halo Point comes in. Because the system is built on brain-inspired architecture, Intel claims it can achieve similar results with way less energy. Think of it as a computer that learns almost as effectively, while being kind to the environment. No doubt, this isn't some magical solution that will instantly solve all AI energy woes, as neuromorphic computing is still a young field, and Halo Point is a research project. However, it's safe to say that it's a significant step forward. Not only that, this new approach to AI has the potential to be a game changer, as it can be used to make AI-powered devices that are smarter and require less energy. In fact, Mike Davies, director of the Neuromorphic Computing Lab at Intel, said that the new system has the potential to revolutionize the industry's approach to scaling AI. Researchers intend to harness Halo Point's immense processing power for advanced brain-scale computing studies, and it is believed that this system will play a pivotal role in tackling scientific computing challenges spanning device physics, computer architecture, and informatics.
It was a surprise, but we perhaps were anticipating a real strengthening of TSMC's business because of AI.
Yeah, I mean, all roads lead to Taiwan right now. If you're going to build anything, whether it's Nvidia and their data center accelerators, whether it's AMD, who are doing better in servers than Intel, who are also getting into data center accelerators, whether it's Broadcom and the networking, you are going to TSMC and you are paying for their most expensive stuff.
That is pretty much a shape of the industry kind of story. There are some specific names that are interesting. Meta is interesting, a story you've been writing about with Asia Counts. We've just broken the story that they're bringing a next-gen MTIA chip, but this is the in-house silicon they want to deploy for their own training and inference purposes. What do you make of it?
I mean, this is them basically joining that long list and lengthening list of these companies that think, hey, I can do this better in terms of what I can...
Better than who?
Well, that's the problem, isn't it, right? They don't want to be paying the massive premiums that they're paying to Nvidia, but they still are. But when it comes to a general purpose processor like this one, perhaps we can do it better than Intel.
Isn't it fascinating that we see this after the day, after the cloud event coming from Alphabet, where there is just this ongoing tension of these big providers of cloud, but also runners of AI and builders of large language models wanting to depend on NVIDIA, but not too much, and ultimately having to be frenemies, Ian. Is this a relationship that can continue?
I mean, it's been going on for years now. If you look at AWS is the progenitor of this trend, and they have really shown that, look, we can, we've got the size to make the economics work, so we will do this as much as we can. But at the same time, the real silicon companies that have been around for years are still just about in the lead. They're still able to push the performance to the limit. So that's the balance that's been struck.
Let's end on Intel. Intel has introduced its latest AI accelerator, Gaudi 3. It will be available in the third quarter of this year, but likely not at scale. And its performance is where Pat Gelsinger has focused. What else do we need to know about Gaudi 3?
Well, it's not so much about Gaudi 3, really. It's the elephant in the room, which is what Nvidia announced earlier this year, which is they'll have their new Blackwell architecture in the market probably around that time. And as Gelsinger was forced to basically admit yesterday, we don't know how we'll compare to that. And the inference that people have taken from that is you won't be able to compare to that.
At Intel Vision 2024, Intel's CEO, Pat Gelsinger, outlined the industry challenges and declared the intention to create an industry-wide open platform for enterprise AI. According to Gelsinger, Intel plans to publish a technical conceptual framework, release reference implementations for generative AI pipelines on secure solutions, and also add infrastructure capacity in its developer cloud, which is aimed at ecosystem development and AI acceleration. One interesting aspect of Intel's AI strategy is its focus on augmented intelligence, and this isn't some fancy marketing term. Instead, it reflects Intel's belief that AI should work alongside humans, not replace them. This human-centric approach needs some serious computing power behind it, and that's where Intel's hardware expertise comes in handy. The company is also constantly innovating in chips to create processors specifically tailored for AI workloads, and these chips are designed to handle the massive amount of data processing that AI tasks require, while still keeping efficiency in mind. For instance, the company announced its Gaudi 3 chip a few days ago, which it claims is both faster and more energy efficient than NVIDIA's flagship H100. To compete with NVIDIA, Intel offered its new chip for a fraction of the cost of the H100, and while NVIDIA is coming out with the Blackwell GPU soon, which it claims are the world's most powerful chips for AI, Intel's new product can still be seen as a win for the company, as Blackwell might face supply problems thanks to increased demand, so customers would have to use other non-NVIDIA chips. The AI chips market is very large and will continue to grow massively, so companies like Intel definitely have a shot to grow more in the future. Now, for the big question, should investors buy Intel stock based on the company's recent product releases? That really depends on how you feel about Intel yourself. Many investors are bullish because they believe the foundry business will take off, and others believe that Intel's cost-efficient AI chips are a good alternative to NVIDIA's more expensive ones. If you believe that Intel is going to do well with Foundry and its AI chips in the future and don't mind waiting for growth, then it might be a stock worth having with the price hovering around $30. So, what do you think? Are Intel's gloomy days over? Let us know your thoughts in the comment section. And if you would like to know more latest updates about Intel and what it's been up to, then go ahead and click on the next video on your screen. See you there.